Hello and welcome to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a deeper dive into mining and exploration news. Joining me today is Joe Mazumdar, editor of Exploration Insights. Joe, welcome back to Kitco.
Thanks for the invite, Paul.
Now, before we start, please note that Kitco Metals and Kitco Media provide news services only and do not offer tax, legal, or investment advice. The opinions expressed here are those of the contributors and do not necessarily reflect the views of Kitco Metals. For complete terms and conditions, visit kitco.com. And of course, if you like what you see, don't forget to hit that subscribe button. Let's start with a deep dive into silver, Joe. The silver price has hit a 10-year high of more than $32 per ounce, and investors are expectant that it is starting to catch up with the runaway pace its sister gold has set this year. Gold has hit an all-time high of almost $2,700 per ounce, while silver is still about $20 shy of its historic highs of $50 per ounce set in 2011. Silver is starting to beat gold, however, having risen 32% in value this year compared to the yellow metals 30%. Joe, why has the silver price run up until recently? Why has it lagged the one seen in gold?
Yeah, I mean, silver, that torque tends to happen later in the cycle. So I'm not surprised that it's sort of catching up, but there might be hope that the gold silver ratio contracts further. I mean, the gold to silver ratio peaked at about 64. I mean, in terms of favorable to silver back in early 2021. And it has been as low, meaning bad for silver, up to 125 back in March. That would have been in 2020. And so now the last few years, it's been settled at around an average of about 80 to 85. And it sort of stayed within that window. And this year, all we did see was a contraction of maybe 86 to 83 or something like that. The hope is that contraction is even more and gets us back to maybe the 70s, and that would push silver up even more and provide more torque. And so the idea to expose, to get more exposure to silver names.
Joe, let me put you on the spot with a quick question. Can you recall, or do you know what the gold silver ratio was in Adam Smith's seminal book, The Wealth of Nations?
It would have been a fraction. Silver would have been higher than gold. Yeah.
Well, if I remember correctly, it was about 16 to 1. Okay, well, let's move on. A lot of silver pundits are calling for the silver price to rise, or forecasting the silver price will rise to $100 per ounce or above. But in more immediate terms, Joe, does silver have another $20 per ounce in it to make a new record?
So if you look at a $20 increase, which would have been taking it to about $50 an ounce, the gold to silver ratio, assuming it doesn't change, that would mean gold would be about 4,200, 4,225. And there are some people that are saying gold is going to get there. Okay. But if it did change, if the gold price didn't change that much, then the ratio would have to contract to 50 to 55. I mean, over the last, let's say, 4 to 5 years, like I said, it hasn't been below 64. So that would be asking a lot. So it's probably a combination of, demand for gold, but gold with respect to North American or Western interests, because that's really where the silver torque comes from, those style of investors, that bleeding into gold equity ETFs and that bleeding into silver. And if we see that, then we can see some more contraction of the silver gold silver ratio. But I don't know if we're going to get to the lows that we've seen previously, like below 70.
Okay, now we've talked a little bit about why silver has been lagging gold. When silver does start to run, silver stocks seem to get turbocharged. Why is that?
Well, the thing is that silver, the metal, most of the silver in terms of mine production comes from non-silver deposits. Your lead zinc deposits, your copper deposits, and your gold deposits. Silver dominant deposits or mines constitute about 30% of silver production. So if you want silver torque, you want to get shares of a company that's silver dominant. Geologically, that's not easy. And so there's a high, let's say, demand for those type of companies, but there's little supply. And so the ones that can bring this product do get more torque because they can show that they're more than 50% silver. They provide more silver exposure, and they're not tied up in the idea of silver equivalence, where most of it's base metals.
Now, two of the historical big production centers for silver are Mexico and Bolivia. A couple of news items out related to each country this week. First off, Mexico has a new president with Claudia Sheinbaum. She was sworn in this week. The question miners and explorers are asking is, will there be an open pit mining ban in Mexico or not? This topic got a lot of airtime from explorers and developers at the Gold Forum Americas in Colorado Springs a couple of weeks ago. Joe, what are your thoughts on this?
Well, the majority of silver production does come from Mexico. So Mexico has over 10 billion ounces of reserves in about 148 projects. And there's a lot of companies working there as well. The open pit ban on mining would have a big impact on your large deposits, because not all deposits can be converted from an open pit to an underground, as people have tried to do over the past 3 years in anticipation of a ban on open pit mining. I think right now the Morena Party has probably even more power than it had under AMLO, and the ability of a lot of AMLO's directives, let's say, that he couldn't do during his term. There's a possibility that he could do during the current term of Sheinbaum. I mean, Sheinbaum had got a really good majority also in the Congress and the Senate, and now they want to change the way the judges are elected. And if they can do that as well, the probability of an open pit mining ban happening will increase. The thing is, state to state, there's some states that are more focused on mining, and they might have an opportunity to get around the ban. And that's what I think a whole bunch of miners are hoping for. But if you're in an isolated state that doesn't have a lot of mining, you're trying to push an open pit, it's probably next to impossible right now.
One of the things I'm hearing from companies active in Mexico is that Sheinbaum and her administration is going to be less ideologically charged than AMLO's administration was. AMLO's leaving her with quite a few good interesting parting gifts in terms of high debt, high national debt, high interest rates, high inflation. So Sheinbaum has spoken about her desire to, supercharge the economy, get the economy moving again, attract foreign direct investment. Is that a good setup for the mining sector?
Yeah, but I think most of her push will be improving the relationship with her northern neighbor. And so the elections in the north also are very important in terms of what she can do. But her big push will probably be more towards manufacturing and nearshoring. So the idea that the U.S. wants less exposure to China, wants more manufacturing nearby, and not all that manufacturing capacity can be taken up and, let's say, bluntly, inexpensively in the States. So they will come back to Mexico. They will not replace China in terms of manufacturing capacity, obviously, but it'll be an opportunity for Mexico. I think that opportunity for Sheinbaum or for the Morena Party is much more important than mining right now in terms of improving the economy.
I think trade statistics are highlighting your point there, Joe, because earlier this year, the US started importing more by value from Mexico than China, which hasn't been the case for quite a while. Now, let's turn our attention to Bolivia.
I'll point one thing out is that when we had the NAFTA agreement back in the 2000s, when it started happening, a lot of other countries would actually send their stuff to Mexico, and then it would come up through Mexico as if it was part of NAFTA when it actually wasn't. And so there is that sort of, if we can get it under NAFTA, then we can get it in, and it's easier to go in through Mexico than it is through the States or Canada to get into NAFTA. So there is a bit of that, but I do think that the manufacturing thematic is very important for Mexico right now, and that I think will be her major push.
Okay, thank you. Now, let's switch our attention to Bolivia, where New Pacific Metals this week released a PEA, Preliminary Economic Assessment, for its Carangas project in Oruro, outlining an open pit project to produce more than 6.5 million ounces a year of silver throughout 12 years, an IRR of 26% at $24 silver, rising to 34% at $30 silver. In June, New Pacific put out a PFS, a pre-feasibility study, on its silver sand project in Potosi in Bolivia, and that's to produce 12 million ounces a year for 13 years, an IRR of 37% at $24 silver and 48% at $30 silver. Joe, Bolivia has historically been a huge source of silver and is currently the world's 5th largest producer. With the silver price moving higher, could we see a new wave of foreign mining investment into Bolivia?
Yeah, I mean, with the issues in Mexico, being one of the major producers of silver, people would look to Bolivia, but problematically, it's still Bolivia. So Bolivia still had, in 2023, according to the S&P Global Market Intelligence, they spent about $28 to $29 million in exploration in Bolivia, and that would have made, so that's about 5% of the total exploration on silver for silver companies happened in Bolivia, but that was divided by only 7 companies. So if you look at Mexico, where the majority of exploration for silver happened, and they spent $190 million, that was with a lot more companies. And so for somebody in Bolivia, if their end game is to get taken out, it might have to be a Chinese company that comes and takes them out. Because there's not a lot of Western companies going into Bolivia to grow. And so I suspect that, some company like New Pacific that's in Bolivia and isolated with their assets in there might have to look at, maybe potentially listing outside of Canada eventually to bring that Chinese bid. As we've seen in other countries that Western companies don't want to go, the Chinese bid is important, but you don't want to get in front of it by having the TSX listing.
Well, that's an interesting one because one of New Pacific's major shareholders is Silvercorp, which has connections in China, including management team, and it has precious metals production assets in China. Joe, Bolivia's been off the map for many, many years in many respects. Why did Bolivia fall off the exploration map?
Oh, I mean, it's very left wing. It's hard to. I mean, the social license to operate is very extreme, and so the miner has very few rights to do things. So it just becomes why bother? I mean, the Chinese have come in and they tried to produce lithium from the Salar de Uyuni, and so there have been other people coming in. To promote or develop the mining sector in Bolivia, but it hasn't been as much from the West. And I don't see that changing in the near term.
Okay, well, I suspect I know what the answer to the next question is going to be before I ask it, but I'll ask it anyway. Joe, would you rather have an open pit silver development project in Mexico or Bolivia right now?
Like if it was an open pit in a state of Mexico that has mines, I would rather have one there than in Bolivia. But if there is a federal, a directive to ban open pit mining, it would be hard to pick Mexico.
Okay. Now, a month ago, BlackRock Silver put out a PEA on its Tonopah West project in Nevada for an underground mine to produce about 4 million ounces a year for 8 years with an IRR of 39% at $23 per ounce silver. Joe, Nevada is the silver state. Can silver make a comeback there?
Yeah, the thing is that the Walker Lane belt of the western part of Nevada has a lot of precious metals deposits, epithermal deposits, and a lot of that has silver in it. and so there is the opportunity to find more silver there. I mean, the last big deposit that has been discovered there has been Silicon Merlin. I mean, that's gold dominant, but still has silver credits as well. But to find a silver dominant play there, we haven't seen that in a little bit. It doesn't mean that it's still not out there, but most of the people in the Walker Lane belt are looking for gold dominant epithermal systems. But yeah, there's nothing to say that something like that can't be found in that belt. Or in the northern Nevada Rift. In the northern Nevada Rift, where they had the Midas project that Newmont had, that had a lot of silver in it. Yeah, those kind of deposits, even going into Oregon as well. These are structures that are related actually to the Yellowstone hotspot migrating, or the plate migrating over the hotspot and getting these big structures off of them, and then those generate a lot of epithermal systems both into Nevada and into Idaho. So there's always the opportunity, but a lot of these companies will tend to find gold and silver, not just silver.
Okay. Now, you mentioned that primary silver deposits are quite rare, but there's a number of exploration companies doing quite well at the moment. Silver exploration is attracting investor attention in Canada and British Columbia with Bolivar Silver, in Peru with Highland Silver, and in Argentina with Abra Silver. Even Frank Juster is getting in on it with the launch due to go live on the TSXV in the coming days of Argenta Silver. Joe, what do you look for in a silver explorer?
Well, most of these projects have been known, but now we've had, more silver interest, partially because the silver price has gone up, but also because a lot of the places that produce silver have become more problematic, like Mexico. So Dolly Varden is obviously a project that's been known before. They've done an excellent job of finding new mineralization along these, I believe that says east-west structures. I visited it earlier this summer. In Peru, Highland Silver, that project's been known for a while. Esperanza had it, and then SSR Mining. But it's a big land package, and a lot of that has not been adequately explored. And with Abra Silver, that project, Diablillos, has been known since the 90s. I used to drive by it back when I lived in Salta. So all these projects have been known, but the interest in silver, the higher the price, the problems around, and exactly to the point that we made earlier, that silver dominant projects are hard to find, has elevated those projects and those companies right now in the minds of investors. So I can see that easily happening. And Argentina is a good jurisdiction right now. It's improving federally. They've done a great job, and Salta is one of the best provinces in Argentina. I think Peru's turning. So Highland Silver is a good spot. And British Columbia, if you're in the right situation there, obviously infrastructurally, sometimes you can have issues, but if you can get to grid power, you've got pretty inexpensive power to run with.
Now, when you look at silver exploration plays, Joe, is there a, let's say, a gram per ton that's a threshold above which you think is potentially interesting, below which you think is potentially less interesting?
So, yeah, I mean, you start, with the valuation. Is this a good entry level? But management, because it's a non-cash flowing company, management's obviously very important. I would also, if I'm looking for silver, then I want to know how much silver exposure that deposit style that they're looking for actually gives me, that it's not like 15 or 20% silver and everything's wrapped up in a silver equivalency. And the size potential, is this an open pit, a lot of tons, or is this a high grade underground thing? That might set up who the suitor could be, because I'm always looking for a potential suitor. And also, because they're not cash flowing, how much does it cost to explore? How much does it cost to drill? Is this helicopter supported? Do they have access issues? Do they need camps? And so the problem with a lot of the stuff that's remote is it's nice in some respect, there's no people there, but the problem is that, infrastructurally, it might cost them, $800 a meter some places to drill. And so the need to keep going to the market becomes even more intense and they need to get even more money. And so bang for buck is an issue for me in these, volatile financing environments. If it's a new project or a retread, we just went through some of those retreads, but each project that I talked about, they found a new deposit, whether Dolly Varden in the vein system there, Diablesio's with the Jack deposit that wasn't known before. And that's basically what Highland Silver is going to try and do as well at their project. The other thing you want to look at is, what kind of process is it? Is it heap leach versus mill? Infrastructure, power access, social license to operate is huge. And I don't want to just pick out, it's huge in Peru. It's huge everywhere. So British Columbia, Peru, and Argentina. Well, probably less Argentina because of Diablesio's, there's nobody there that lives there. And then also jurisdiction. I would say Argentina has gone up a bit federally in terms of making it easier for people for foreign direct investors to come in. I think BC is sort of, with the NDP government, not the greatest spot right now. And I would say Peru is improving because they know how important mining is.
Okay, now, Joe, if we're talking about gold, a high-grade gold deposit, you could say sort of 10 grams per ton. With silver, would it be, multiply that by the gold-silver ratio, 80 grams per ton and above, you would consider high-grade, or is it different for silver?
No, that's one way of doing it, but knowing that, there's a lot less pure silver plays than pure gold plays. And so that's where the product comes in. So that's where metallurgy is important. So is all that silver wrapped around a lead concentrate, or is it in a copper concentrate, or are they actually producing silver? So if they're producing silver, that should be prioritized. The problem is that when you have to produce a concentrate, you got to send it to a smelter. Then depending on the smelter, you got to look at the payable for the silver. And it might change depending where you send it. And then, so your product is no longer silver, which is fungible. Now your product is something that's less fungible, which is a concentrate. And depending where you send it, the payable on silver is different. And then all those deleterious elements that maybe you didn't care about when you were making a silver bar, it went into the tailings. Now it's in the concentrate. That will also determine which smelter will take it and how much payable you will get on the silver. So it gets a lot more complicated when you're not producing silver as opposed to a concentrate.
Thank you, Joe. Now let's talk about financing. One financing stood out for me this week, and that was Radisson Mining Resources. It stood out because it twice upsized a private placement to explore its O'Brien gold project in the Abitibi region of Quebec. It originally sought 3 million Canadian, upsized it to 6, and now upsized it again to $7 million. Joe, an adage in the sector is to take the money while it's available. However, as Neil Add said on Digging Deep last week, raising too much capital can lead to capital misallocation. What are your thoughts on taking the money while it is available?
Well, I mean, it would be nice, like you always ask for the use of proceeds to know what they're actually going to do with it, because if they've got catalysts coming up, you want those catalysts funded with that financing. You want to be the last money in for that next catalyst. You don't want them to be drilling and then run out of money. Or if they've got a study coming up, like a new resource study coming out, and then, oh my God, we still need another $2 million. So you should leave a little bit more out there just to make sure you can cover your bases and generate more options. The problem if you don't, try to be too cute and don't raise enough money is that if you get into that situation where you don't drill that specific hole, you can't release your resource update, or the resource update doesn't get the kind of push on your stock that you hope for, then you're probably raising money again, but maybe at a lower price than you were raising before. And so I think for these non-cash flowing juniors, you got to raise as much as you can at the time, but you got to be fiscally responsible in terms of how you spend that money, because you should know how difficult it is to raise that money.
Okay, I think a number of CEOs seem to try to raise the minimum amount, drill a little bit, and hopefully get a lift from that, and then come back to the market in a year's time to raise some more to minimize dilution. But it does seem that rarely happens that way. So end
Well,
up
I
taking
mean,
that
the
solution.
thing is that if you're in Canada and your assets in Canada, flow through is a little bit more rhythmic, and you can depend on it more because the investor is not really interested in your project or your management team or anything. They're just interested in a tax break, and so that money will happen every year, and so you can potentially say, I'll just raise it now and then raise it again because I know it'll be there. For the person who doesn't have that asset in Canada, they can't depend on that money being there.
Okay, let's switch tracks. It's LME week in London this week, and several reports on base metals, particularly copper, out. This week, leading diversified miner BHP said it anticipates a re-acceleration of copper demand through 2035 with a compound annual growth rate of 2.6% versus 1.9% over the past 15 years. According to the BHP Insights publication it put out, that means about 1 million tonnes per year of copper demand growth every year until 2035. The company estimates the capital required for expansion through 2035 at $250 billion US dollars, up from $150 billion for the past 10 years. Joe, that seems an awful lot of money to build out the copper supply chain. What do you think of that figure?
So, let's take everything with a grain of salt. It is BHP. They're a big diversified miner, but they also put a lot of their weight behind the nickel market. We saw what happened there. We saw Rio Tinto put a lot of their weight behind the lithium market. We see what happened there. So everything they say, take with a grain of salt. But with respect to the copper market, I do believe them a little bit more. The problem that I have is not so much the growth in the demand. Why I am bullish on copper is more the contraction of supply. And I think they get into that with the capital intensity of copper. And I think that's one of the issues that will constrain supply going forward, and which is bullish for the copper price. And also the time frame with respect to construction permitting and that, which has expanded from like whatever it is, 15 to 16 years now to well over 20. And some projects like Resolution, I think I've said this a lot of time. I mean, when I was at Phelps Dodge, it was supposed to come in 2010. We're in 2024 right now, and that's a project in Arizona. And so all of this conspires to constrain supply of copper. So even if we get like a reasonable growth in copper demand, we just don't have that supply out there.
I think Resolution's been 26 years plus in permitting. BHP noted that the capital intensity of brownfield projects has increased by 65% since 2010, approaching similar levels to greenfield projects. Joe, why has capital intensity for brownfield projects increased so much, given that presumably there's a lot of existing infrastructure that they can benefit from?
So if we go over some of the capital numbers, the QB2 one is probably the best one to look at, because that's a reasonably, it happened recently. So that's in Chile, 4,400 meters above sea level. That started around 7 billion, probably started a lot less, went to 8 to 8.2, and then it went to 8.6 to 8.8, like within almost a year. And so the problem with a lot of these brownfield expansions, as you're talking about, they're not incremental expansions. They can be significant increases in mill throughput. Those significant increases in mill throughput require a lot more power. So you got to build up your power infrastructure as well. And then that also requires a lot of water. And in Chile, that's usually a desalinization plant. And that requires more capital. That requires pipelines, that might require a new port facility. All of this has, not only on-site facilities, but off-site facilities. And all those costs have gone up. Labor's gone up. But yeah, even though we call it brownfield, they still need a lot of permits for it, because the only brownfield part about it is it's an expansion of the current deposit. But what they're trying to do is get a lot more tons at lower grade through a bigger plant, which has all these ancillary things that have to happen as well. That's really where the capital explodes.
Okay, BHP also said the pipeline of greenfield projects are generally, and I quote, at the higher end of the difficulty spectrum, unquote. Joe, as you look at greenfield copper projects around the world, why are they so difficult?
Well, one is trying to get them built. We saw, what happened in Panama. It got built, went into commercial, and then got shut down. So there's a lot of fear out there with respect to social license to operate. Make sure you do the right thing, and so you don't have a situation like that, which extends your timeline even more. And we're not only talking about these countries that people think are jurisdictionally risky, but also the countries where people think that it should be easy. But that might be why most of the expansion of some of these gold companies that want to get into copper, like Barrick, are doing their expanding in Zambia and in Pakistan, and not in Chile or some of these other countries where copper is more dominant. So that ease of permitting will direct people to go to some jurisdictions over others. That's definitely where the Chinese have gone, where they think that they have some leverage or comparative advantage in getting projects built. They'll go to those countries specifically. Where they don't think that they have that advantage, they'll avoid. And I think that that's also translating to what some companies do, like Barrick. Like Pakistan is not everyone's primary jurisdiction for copper. Like endowment-wise, it's well endowed with copper, but it's just not a place anybody or everybody can work.
Okay, well, let's dig deeper into some of the challenges of copper exploration. S&P Global Commodity Insights put out a report this week highlighting a lack of early-stage exploration as a cause of the dearth of copper deposit discoveries. It said 239 copper deposits hosting more than 500 million tons have been discovered over the last 30 to 35 years, with only 4 discoveries made in the last 5 years. It said funding for grassroots exploration has fallen to 28% of the total exploration budget from 50 to 60% in the 1990s and early 2000s. Joe, why is it that a copper price at historically high levels of $4.50 US per pound and the perception of a large supply deficit coming has not resulted in investors looking to invest in copper exploration?
Well, some of that copper exploration has discovered deposits that are still sitting on the shelf, like your pebbles, like your resolutions. And there's other deposits there to talk about, like some of them and other ones in Arizona. But the copper exploration is different than gold because junior miners are about, 40% of grassroots exploration for gold is done by juniors that are cash flow strapped, that continue to look for money, but they bring the funding for that type of exploration. There's less of that in copper. Copper is a little bit more difficult in terms of exploration. The holes are deeper, they're more expensive. It takes more drilling to delineate something, and it's a longer timeline for proving something out. And most investors, and juniors, used to don't like that. But that's changing a bit with respect to copper explorers now. But those copper explorers, like if we talk about gold companies or gold explorers having to go back to the market, these guys, if they're drilling in the Andes, some of these deep holes, each one of these ones could cost them $1 million, because they're more than a kilometer and they're, being drilled at about 4,800 meters above sea level. And so the propensity for copper junior explorers is to look for small projects like your gold-rich volcanogenic massive sulfide deposits or your skarns, something that they can drill out themselves. But those don't add much in terms of tons and volume to the overall copper market. But it's something that they can do. It's doable. And they have the grades. They can show the grades to your investors and things like that. The bigger deposits need deeper pockets and need joint ventures or majors such that they know that the next season they're funded. So I think with those big programs, you definitely need help by a major, because you can acquire all the ground, you can have the people on the ground, but to get continual funding from the retail markets is very difficult.
I think one news item this week that really exemplifies that, Talk Resources announced a $2 million private placement, and its use of proceeds, it said, was basically just for G&A, corporate expenses, administration, etc., i.e. no work in the ground. For me, that really highlights the fact it's difficult for copper explorers to raise money and to raise meaningful amounts of money so they can actually advance their projects considerably.
Yeah, and so some of these guys, find it hard to get new concessions, and so they have to deal with third-party vendors, and that has an earning agreement. And usually, to raise money just to pay for the project is not an easy thing to do. Because the only catalyst that is you now own 100% of it. It's not like you've got money to drill it right now.
Okay. Now, you touched on this earlier in our conversation today, Joe. A key exit strategy for many explorers is a takeout by a bigger company. In the copper space, often that's a Chinese company. Joe, do Canadian copper juniors have a sort of Damocles above their head, ruled by the Canadian government and its belief that it has extraterritorial rights to block Chinese investment in resource projects operated by Canadian companies for projects outside Colombia?
Yes, I think that that thread on that sword is something that's for them to consider. With the election, with a potential election in Canada, that could change, and some people might wait for that. In terms of their own specific timeline. But if you are in a jurisdiction where half your potential M&A bid is coming from that side of the ledger, like from the Chinese side, I think it behooves you to look at delisting from Canada in the interim and listing in other jurisdictions, whether it's the ASX or just leave a ticker on the OTC or on the New York Stock Exchange in terms of not having those issues with not only getting taken out, but funding, as we saw with Solaris.
Okay, well, on that bombshell, Joe, delisting from Canada, let's leave it there for this week. Joe Mazumdar, thank you very much for joining me.
Thanks a lot, Paul.
If you like what you see, as I say, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.